Hey, Bulls and Bears, we are back with another dose of economic reality. My name is JJ, your host. You're watching Bull Boom. What's the name of the channel? Bull Boom Bear Bust. Yeah, I was going to change the name, but I decided to keep it. It's a weird name. And I actually came up with a name before I even realized I was going to have a channel here. I was just going to put out one video many years ago, and I was like, ha ha ha, Bull Boom Bear Bust. And kept the name because I don't know why I kept it. Anyways, let's get on with the news. We are seeing a lot of corrections happen. The latest, and no one should be surprised about this. Amazon plunged. Amazon plunged 20%. Now, months ago, we started talking about how the inventory was rising at retailers, including your brick and mortar stores, Walmart's, Targets, and how Amazon was canceling leases on warehouses and stopping construction on new warehouses and even corporate towers. And that was the warning sign. We saw the slowdowns. Here we are, 20% plunge. Amazon becomes latest tech casualty stock, 20% plunge after dismal earnings reveal giant red flag. Well, no one here is surprised. I doubt anyone here on this channel lost money on this. Now, some people are looking at this as a buying opportunity. I'm not in that camp because if consumers are tapped out now, what's going to happen down the road 3 months, 6 months, a year from now? Are consumers magically going to get pay raises big enough to match inflation? I hope so, but I don't see that happening unless that Santa Claus comes down, like we talked about, and hands out all these freebies, more stimulus checks, more enhanced unemployment benefits. But what's going to trigger that? The last time it was a pandemic, is there going to be some other thing occur that's going to justify such intervention and all these handouts and rescue programs? If there is, I'd like to know what it is. Please let me know down in the comments. Otherwise, there's not going to be much help here for the consumer. There's going to be a bankruptcy tsunami across the consumer, middle class especially. The poor, they were already poor, so they're probably going to remain poor. They're already living on just a little bit. So I expect that to get worse too. I expect homelessness to increase, unfortunately. There's nothing being done to fix the problems right now. And now let's talk about a couple other videos that I put out that people had questions about. One, a few videos ago, I talked about 25 days left of fuel. Now and I talked about that in this video, but some people misinterpreted that. It doesn't mean that fuel is going to run out in 25 days. It just means that we have 25 days left of supply if there were not any more increases to the supply. So if we stop adding to the supply, it would run out in 25 days based on how quickly it's being used. And we use similar numbers in the housing market where we look at months of supply of housing. It doesn't mean that homes are going to run out and that there's not going to be any homes for sale. It just means that the current pace of sales, homes will run out, and there's been 6 months supply, there's been 9 months supply throughout history. There's been high and lows on that. But it doesn't mean it's going to run out. It means that if new homes stop coming on the market, that's how long it would take for the current inventory to sell, right? So next month, if we look at the supply of diesel, right now it's 25 days. If we look at it next month and it's 40 days, that's a good thing. That means that we're getting more supply in and the stock is increasing. But if we look at it next month and it's 15 days, that's another red flag. That means the time is lessening, the inventory is lessening compared to how much stock we have compared to how much is being sold, right? See how this works? So it's not that it's going to run out in 25 days. It's just based on the usage of that. Okay, I think most of you understand. Well, let's move on to the next topic here. Over in Europe, we see that inflation is triggering another central bank rate increase. Policymakers on Thursday approved another hefty rate increase to corral prices. Prices have gone too far, too fast, is what they say. Now, I want to point this out again because a lot of people still doesn't seem they understand what's going on. This is a worldwide problem. Inflation is a worldwide problem. What do we have in common? It's not one leader here in the US. People think, oh, get this guy out of office, everything will be fine. Sure, you may see things fine in some areas. Maybe fuel prices will come down. Maybe they'll open up the pipelines again. But other problems will pop up. For example, maybe we'll get a president that wants to force interest rates back down and cause the housing bubble to get bigger. So you're going to see problems go down here and go up there. So I don't see any solutions by replacing some guy in office. I wish it was that simple. If it was that simple, then I would just go into politics instead of talking about the financial side of things. So to me, the politics really doesn't matter that much. It may help some people because if you're someone that's spending a lot of money on gas, you'd rather see gas prices go down. But then some other person might want to see home prices go up instead of down. And we're seeing that now with the higher mortgage rates, the higher interest rates. So to each his own. To me, I just try to navigate the waters as they come here, and it doesn't matter if the water is coming from this way or that way. You just try to navigate it. That's why this whole left versus right thing to me is just nonsense, and I don't try to spend much time on it. But I appreciate your messages. Actually, I stopped putting my email down in comments or in descriptions rather down there because I got so many crazy emails and just people requesting just weird topics and stuff. I just didn't have time to go through all the emails, but people still had my email from before. It's been like over a year, and I still am getting these messages. Hey, talk about this, talk about that. So people want to use this channel as like a political tool or something like that. So not surprising. But still on the topic of Europe, UK banks park $1.3 billion to cover bad loans as recession looms. Now, 1.3 billion may not seem like that much, but keep in mind in the UK, the population is much smaller here than in the US. It's actually a lot of money considering the population of the UK. But why are banks putting money aside to cover bad loans? I thought the economy was great. The economy's on fire, as they say. And also, why are banks allowed to continue to loan out money that they don't have, knowing that there's going to be a recession? You see, that's why you see a lot of talking heads out there not admitting that there's a recession, because if they admitted that there was a recession, then they would be expected to change the way the banking system works, right? And they don't want to do that. They don't want to change the way the banking system works because a lot of people are getting rich off of that. Banks have ability to loan out money that doesn't exist. That's something that you or I don't have. Imagine if you could loan out money that you didn't have, charge 20% interest on it, and then if somebody wanted to deposit money with you, let's say you were the bank, somebody wanted to deposit money with you, and you're going to give them a fraction of 1% per year on what they've put in your institution if you were the bank, right? Insane, right? It wouldn't be fair. It's not a level playing field. So what they get away with, the banks, and what you and I get away with, completely two different things. There's one set of rules for them. There's another set of rules for us. And this is why we see this two-tiered society. This is why we see the wealth transfer continue to benefit the people at the top, because the people at the top, they basically run everything, and they want you working for them. They don't want you as an independent contractor. They don't want you as a small business owner. That should have been obvious in 2020 with the way small businesses were treated compared to multinational big companies. And this is all by design. This is not some sort of mistake. It's not some sort of, this crisis came out and we had to do this. This is all by design, folks. Today, CNBC, an analyst, higher unemployment than the future, almost guaranteed. Wow, you mean so all the jobs that were created from the easy money and the low interest rates and the debt and the borrowing and the spending, people spending money they don't have, all the stimulus payments, all the enhanced unemployment benefits, all that spending that caused the boom or the illusion of an economic boom that created all these jobs. You see, when people have money to spend, when handouts are given, that creates jobs because people are going to go out and spend money. So you're going to need more car salesmen. You're going to need more leasing agents for apartments. You're going to need more real estate agents when there's a real estate boom and interest rates are low and when banks are loaning out money they don't have. That creates an economic illusion. It creates the boom, and that creates jobs. And then when things reverse or when things tighten, and the Fed's tightening, that's why they say tightening, right? Loose money policy, more jobs. Tightening equals less jobs. So it's obvious. So even CNBC is out here admitting this. Will they admit that there's job losses when it happens? Well, probably not. They'll probably change the definition of what unemployed means. Maybe they'll change the rule to, or maybe they'll change the definition to once you're unemployed for 10 days and beyond, or 10 days or more, then you're no longer unemployed. Then you're out of the labor force, and then they can keep the unemployment number low. And then people looking at the news, they could say, wow, the economy's still good, no problem. In the meantime, you've got tent cities popping up everywhere. You've got, 1 in 6 people, almost 1 in 5 people now cannot pay their rents on average. In some cities, it's worse. In some cities, it's like 1 in 4 people are behind on their rent. We still have 20 plus million people on a program to help them pay their monthly utilities. Otherwise, they would be freezing this winter, and you'd see just thousands of people wiped out just like that. But it's going to be more rescue packages, more spending, more lies about how the economy is doing good to keep you spending, to keep you spending money you don't have, or borrowing money, swiping your credit cards, taking vacations, going to ball games, to keep you in the system, to keep you in debt, and to keep you spending, and to keep you from really knowing what's happening. Of course, I think most of us here know what's happening, and hopefully we'll be better than the rest. So I say keep stacking in all ways you can think of to prepare for what's ahead. But that's going to be all for today, folks. We'll be back on this weekend's update, and we'll have a good one for you. It's going to be out and about. Thanks for being here, folks. Keep stacking. Bye for now. Big love and peace.